Hello, everyone, and welcome to this webinar on planning and lending for dairy modernization. It arises from a cross-industry initiative that's aimed at providing practical information to dairy farmers who are considering modernizing their facilities. My name is Derek Haley, and I'm a faculty member at the University of Guelph, and it's my pleasure to be your host today. Soon I'll turn things over to our moderator, Tom Wright. As I mentioned earlier, it is a cross-industry project, and its goal is to provide practical information to dairy farmers considering modernization. The funding for this project comes from OMAFA and also from Dairy Farmers of Ontario. This is our first webinar, and we are planning to have more focused on two main areas, financial and planning, and also focusing on the area of barns and systems. And again, the goal here is to help producers navigate this whole process. We want to deliver usable, unbiased information in many different formats. And importantly, we want to try and avoid information overload. Here you can see the logos of those organizations that are represented on our project steering committee, which has been just tremendously supportive and collaborative in bringing us to this point in time. And with that, I will now turn things over to our moderator for today, Tom Wright. Tom?
Yeah, thanks, Derek. Happy to be here for the first webinar for the Dairy Modernization Project. So today we're talking about planning and financial decisions. We're going to take kind of a high-level decision tree approach to this discussion today. Planning can take years before we're actually moving dirt and thinking about new barns or renovating old barns. And I think we just want to acknowledge up front that it's a massive undertaking for a lot of producers. It's probably the most expensive project most will undertake in their dairy careers. But saying that, a new facility brings a lot of opportunities. It can improve operator health and safety. It can improve quality of life, and it provides for lots of opportunities for automation, more data. Obviously, we live in a world of a lot of data, and certainly cow comfort is front and center of our minds as well. So today's discussion, lending and planning, happy to have three members from the Dairy Modernization Financial Committee with us. I'll let them introduce themselves, but just want to acknowledge the great cooperation we've had in planning this with John Townsend, Jeffrey Adams, and Steve Duff. So I'll just call on John to give us a quick intro on himself.
Thanks, Tom. John Townsend here. I've been in agriculture and commercial finance a little over 20 years, initially as an agricultural relationship manager myself. Spent some time adjudicating agriculture files, and the last, let's call latter half of my career to date has been in a leadership capacity within Southwestern Ontario.
Thanks, John. Jeff.
Thanks, Tom. I'm Jeff Adams. I'm a relationship manager with TD Ag Services out of the Guelph office. I cover Wellington County and with having some clients outside of Wellington County as well. I've been in ag banking almost as long as John, for about 17 years, with my last 4 years being with TD. Previously, I had worked with FCC. Maybe a little bit about myself. I don't want to talk too much about myself, but I'm married with 3 kids. My kids are 12 down to 7. We live on a 56-acre hobby farm in Flamborough. For those of you who don't know where Flamborough is, it's between Guelph and Hamilton. And we have about 20 head of beef cattle there. So I'm excited to be a part of the panel here today to discuss dairy modernization. Over the years, I've financed quite a few dairy barns and looking forward to the discussion. So thank you.
Great. Thanks, Jeff. And Steve, my colleague.
Thanks, Tom. Hi, everybody. Steve Duff, Chief Economist at the Ministry. I grew up on a dairy farm in Northumberland County. My graduate work was on trade liberalization between Canada and the U.S. I worked as a policy researcher for the Milk Marketing Board back then. Been with the Ministry almost 30 years now. Beef and cash crop producer in Northumberland and Bruce County. Adjunct professor in Ag Econ at the University of Guelph, and I'm the farmer chair of Farm Management Canada. So thanks for having me, and we'll look forward to today's discussion.
Great. Thanks, Steve. When we were putting this webinar together, we wanted to make it not completely abstract. We're not going to go ahead with a million PowerPoint slides for you guys today. But I put this scenario to the panelists just to give us something to react to. So a farmer's looking to build a barn in southwestern Ontario. They have 250 acres that are workable. They're in a 1990s 50 cow tie stall barn that's obviously pipeline. They have a pen with 8 extra cows that they're jockeying around to milk, and they're filling 75 kilos a quota with 30 liters per cow per day. And this producer is 57 and with some health issues. And the daughter is 28 years old and wants to take over. So we're going to refer back to this a little bit as we go through. Angie's going to put some of these notes into the chat just so you can refer back to see what the situation is. But as we move forward, when I put this out to the panelists, generated a lot of questions from them. And I think one of the first things that we want to just address right out of the box, and maybe I'll push this one out to John. You talk about, and we've talked about this with the financial committee several times, is what is this relationship like when it comes to the farm and their financial institution? So, like, why is that important to you, and why does it matter?
Yeah, so specifically, I'd like to really understand and dig in. Are you working with an agriculture relationship manager or agriculture specialist at your existing financial institution? When we look at it, upgrading your dairy barn is a strategic move, and having the right financial partner can make a significant difference in ensuring the barn upgrade and broader business goals of your farm are considered in unison. Working together with a specialized agriculture relationship manager or ag specialist ensures you are working with a partner that first off has deep industry knowledge, understands the unique opportunities and risks specific to the dairy industry, and can help implement an appropriate financing structure to match your farm's cash flow needs and longer term aspirations. If you are not currently working with an agriculture specialist at your existing FI, I highly encourage you to connect with your advisor and ask who you can speak with that has an agriculture and dairy expertise specifically.
Thanks, John. And Jeff, I know this is a question that comes up with this panel a bunch. What are your thoughts on that?
And more specifically to this scenario, I think one of the questions I had was just around the ownership structure of the and just dealing with succession planning with the daughter coming into the operation. Just having things, having an open discussion about the ownership structure of the farm moving forward. I think even before looking at quotes and deciding to even build a barn, I think, you have to sit down with your family and discuss not just with the daughter or the successor, but the non-farming siblings, just having an open discussion around the long-term ownership of that farm, just having an open, frank discussion and communication around that. Another main question I would have to these folks would be, do you have a good ag accountant? That I think having a good ag accountant is super, super important because they will help you decide what type of ownership structure you want to move forward with, whether it's a corporation and or a partnership. I think you want to engage your accountant nice and early. The earlier you engage your accountant, the more options you'll have in your toolbox moving forward to plan ahead. It doesn't mean you have to start turning ownership over to the next generation right away, but it gives you more of an opportunity to plan ahead and have the discussions early. And they'll give you great support and letting you know whether it is a corporation or a partnership that you want to move forward with, and also help you with managing your capital gains exemptions and making the best tax strategies ahead of time. I think the key in this situation is that the family farm is set up for long-term success, and engaging a good ag accountant, I think, is super critical to that moving forward. So those are a few of my thoughts on the matter.
Perfect. Steve, I don't know if you had thoughts on this one as well. There's a bit more on the succession I think we want to get into, but interested in what you're thinking is why we all kind of jumped to this when I was asking about this scenario, why we all jumped down this road of succession.
Yeah, again, to build on the previous comments. Obviously, there's, the scenario leaves a number of questions, which again, I think, to the point about, do you have a relationship manager? Do you have a good accountant? Again, I think a lot of it goes back to understanding what the current business situation is, both in terms of the financial, the agronomic, in terms of crops and the cattle, and the financial side of things. A lot of small producers, and this is a small producer, don't carry significant amounts of debt. So a lot of those producers, and regardless of sector, they don't necessarily have a great understanding of the current financial position, right? They don't necessarily have an appetite for debt. They don't necessarily have a great handle on how to provide the information required to acquire, financing or service debt. And they don't necessarily always have a great handle on what their current situation is. And so to these points, I guess, there are a few things in the scenario, I think, that lead you to succession very quickly. An older producer, health issues, obviously a mature farm, a farm that is pretty much at capacity from a physical point of view, and at least one child. We don't know much about the rest. We don't know about whether the husband has a wife or otherwise, and how that plays into things, or other siblings that are in ownership of that farm. But we do have, a clear indication that the current situation is challenging them in a variety of ways. And you have somebody, at least from a succession point of view, that has shown interest. Do they know enough that they truly want to be part of it? There's a lot of things to iron out. And then within that, what are the financial situation of the farm to begin with? And that's an open-ended book depending on the situation.
Yeah.
Yeah.
So I think
I'll come back to you, John, just to expand on that, because I know we talked about this recently in terms of like the question Steve mentions, like it doesn't mention other siblings, it doesn't mention the parents' retirement plans and things like that. So how does that play into your thinking when you're looking at a situation like this?
Yeah, Tom, I'm glad you asked. For me, when I want to drive down a succession, for me, I want to kind of understand what are the long-term plans and goals for the farm operation, keeping potential succession events in mind. Something to consider: are there non-farm siblings who need to be considered in the succession or transition plan, and its associated potential impacts to the farm's core operations? Will you, as the successors, ultimately need to draw income from the farm post-succession? Will some core assets potentially need to be sold to compensate the siblings, or your parents, yourselves, into retirement? And that could be farms that are owned that the barn doesn't sit on, or other core assets that may need to be divested. Understanding the mid and long-term vision and goals for the farm business is imperative ultimately to assessing how a modernization project may complement the farm's future successes, or how it may impact or impede other goals of the farm operation, be it from a practical operational view or from a financial perspective. Assessing how other aspirations or transition succession events may influence the operation's cash flow now and in the future enables the management group or ownership team to align the plans, to adjust the timing of the realization of these aspirations or goals, and engage with the appropriate advisors on how best to achieve these goals, be it from a finance, taxation, and family legacy perspective, all the while allowing the operation to continue to provide a meaningful living for those that are involved. For this reason, it's highly advisable to having open and candid conversations with your advisory team, including your banker, your accountant, and your lawyer, so that everyone has line of sight early on what you are planning to do and are best suited to provide the proactive advice, guidance, and solutions you may require accordingly.
Jeff, I'll just come back to you there if there's anything you want to throw in on that one as well.
John did a good job explaining or going over some of the things I would say. I just want to also make sure that the parents have an idea potentially of what kind of income they may need in retirement, because that would be a big piece of this puzzle. You don't want to be left not being able to draw from the farm down the road if there's no RSPs outside of the farm, or if there's not a lot of other core assets could be sold or transferred to other kids. I think it's imperative to have a realistic idea of what you may need in retirement, as well, that you may need out of the farm to be able to build a proper plan and structure moving forward, whether it's taking money out in dividends or preferred realizing preferred shares. All these things are important to just, having open communication so nobody is surprised down the road. The last thing you want is, in retirement, the farm's no longer viable and having to sell it outside of the family. So I think these are all, we're kind of going down a bit of a deeper dive here, but I think these are all questions that are important or imperative to have up front. So there's only more good surprises down the road as opposed to bad ones. So
Great. And I know, Steve, like your work with other sectors, and John alluded to it a little bit with address these things early on. In your decision tree approach, like what's the advantage of getting this succession, what's the line of sight on that cleared up before you start down the road to modernization? Like the earlier the better, and how does that help?
Yeah, again, I think, you can never have too much information, right? It starts with, we tell people to know cost of production, right? We tell people to know, some things like soil testing, things that we take for granted in the sector anymore. And the succession in a lot of ways is no different, right? And again, because this question or this scenario is a bit open-ended, it's good so you can think through these things. But even when it's not open-ended, there's a lot of people on this call who can sort of probably see themselves in this in some way, shape, or form. Even then it's sometimes difficult to see that point, right? You look at this farm and you say, well, given the size of it, this is not a farm that has likely been generating such significant income that possibly, if there is a wife, for example, that she hasn't been working off the farm, for example, right? Or if the daughter is 28, she likely hasn't been working full-time on the farm and generating all of her income from the farm, such that, is she married? Maybe she isn't. Maybe she has plans to have a family. All those types of things was really the math there would suggest to me that those things are likely a challenge, right? So it isn't just possibly an issue of modernization. It's possibly an issue of expansion. We know that's a challenge for a variety of reasons. So, there's a lot of those pieces. It would also imply that the dad, even though 57 isn't old, it isn't young, sorry, it's not old either. And so where's that income come from, right? So we've discussed those things. To have that laid out, have clear objectives, again, to try to put some of the math behind that, in my experience, it tends to fall short pretty quickly when you have these aspirations, but you don't have, in a lot of cases, the scale to meet those aspirations. I'd say that's probably the case here.
So that's kind of a nice segue into our next topic I want to get to is existing management. I know that's something that we've all talked about in planning and preparing for this. So there's a bit of scant information here about their management. But speaking more broadly to the topic for the audience, it's like, what do you guys think about assessing, having those honest questions with yourself about your management? And who wants to start with that one?
I can start with that if you want.
Sure.
So again, knowing your numbers, right? You can't underpin that challenge. And again, who knows? Small farms can have amazing records, right? But they can also have some pretty poor ones too. It very much depends. Some people are big into the financial side of things, and some people just like working with livestock, and that's pretty common, I find, in some of the livestock industries. So I think there's a number of things there. But again, if you look at it, so the numbers would suggest that this is a reasonably small farm. 58 cows is kind of where we're at. If you go through the numbers, for example, right, I think you'd want to start off with in this part, just like succession, what can you do to improve in the current base of your farm? Forget about modernization, but how well are you doing? And are there things that could alleviate some of these issues? Presumably there's more than just bad back and bad knees, that go with that. Liters per day is a little bit lower than average, for example, right? But they're able to sort of manage that, it would appear, and meet their quota volumes, moving cattle in and out of the tie stall, et cetera. If you go through the numbers, for example, and this is where I think the succession part is interesting, the number of cattle they're using per full-time equivalent would appear to be is pretty low. So in other words, they are labor-wise, at least on the surface of it, more efficient than certainly the other dairy producers whether it's in the ODFAP survey, et cetera. So What is it that's different about what they're doing labor-wise? So is labor really their problem, for example? I don't know. Maybe there's more people working that we don't know. Maybe the daughter does more work than we think. Maybe the dad's better and his back isn't as bad as we think. There's a bunch of things there. 250 acres is actually a lot of land on a workable perspective for a farm that size. It's, that works at, about 5 acres a cow, and that's considerably higher than the average through the dairy industry. So are they selling crops, right? There's a bunch of pasture that's unutilized, and workable would tend not to include pasture. So, there's a bunch of things there that to me could indicate that the operation probably has room to make some improvement or some adjustment, right? Maybe some of that workable could be sold to cash flow, a business change, for example. Working capital tends to be pretty low in this sector. So there's a bunch of things there, I think, that would indicate a deeper look before you even start talking about modernization.
Yeah, that's great. And I saw, Jeff, you were nodding along occasionally. What are you
Yeah,
thinking there on management?
I I would like to touch maybe a bit on just management of the successor, like the daughter in this scenario. A question I would have is how long has the daughter or the successor been working on the farm? I think it's really important for the successor to have ample time working on the farm prior to taking over ownership. And I mean like more than just like growing up on the farm, like as a young adult. I think it's important for the successor to potentially go off the farm for a couple of years, whether it's to go um, go to college or go to trade school, or potentially just work for another farm. I think when the successor comes back, potentially this is going to be a lifelong decision, or hopefully a lifelong decision. It's not one to be taken lightly, and I think it's important to kind of go out and see things outside of your farm and build your toolbox a bit. Like if you go to trade school or you work somewhere else, you'll whether it's even getting into some of the financial sector, just it'll fill your toolbox for when do come back to the farm. Those will all be useful tools to bring back to the farm and make you more well-rounded. Also, the kids may appreciate you a little bit more and appreciate the home farm a little bit more when they come back. They might be like, "Oh, this isn't so bad." Sometimes a little bit of time away makes the heart grow fonder. So I think another important question I had is, has the successor been given any management type roles on the farm, or have they just been doing the labor of the farm for the last so many years? Owning a farm and working on a farm are two different things, very different, in fact. So, has the successor been given the opportunity and some level of autonomy in decision making before they actually own and have to run the business? I think that's probably highly useful to be, you're not jumping in, straight out of the frying pan into the fire, right? So I think it's super important to kind of run through the ranks a little bit. It maybe starting with small management decisions, or decisions that involve money. And I also think it's like, has the successor been involved in paying bills, or working in with the day-to-day management accounting software, doing the bookkeeping? I think that most of the younger generation is fairly tech savvy, so I think that's potentially a good way to get them involved in seeing the day-to-day monthly expenses and revenue that comes in. So when they do, get into the driver's seat and have an ownership stake in the business, it's not like this is a huge surprise, and it's like, oh my gosh, like I didn't realize that we have all these expenses, and buying a nice John Deere tractor, or making a really nice shiny barn that costs a lot. They'll have a better respect for, like, oh yeah, we should probably watch how much we spend in these areas. So I think these are invaluable um, just skills that you need to go into ownership, so you're not going in completely blind and having a bit of a wake up call when you are making all the financial decisions. So those are a few of the things I kind of wanted to touch on there. I think we'll better prepare the successor to take over when the time comes.
Yeah, that's great. John, do you have thoughts on the whole mentoring process? Obviously, this will be potentially a modernization project that goes on for a whole bunch of years in the future, paying things off. So the importance of that mentoring role there.
Yeah, I think, I mean, I would echo some of Jeff's comments there. Understanding, daughter, the balance of the family, their involvement of the farm, whether it be kind of what it looks like now, what it may look like in the future, is important. And really understanding, does your successor have the experiences Jeff alluded to? Have they participated in management decisions, or are they just essentially provided general farm labor? Um, Really, it is important for them to have the exposure to the management decision making process. Understanding and evaluating key business decisions is an important skill that takes time to hone and develop. So if you do have line of sight that one of your potential successors has interest in carrying on the family legacy, I think it's important to give them enough exposure early on so that they themselves start to develop and own that skill set. The other piece that allows you from the existing generational leaders is to evaluate, does that sibling, they might have an interest, but do they actually have the aptitude to carry the farm forward in a successful and sustainable manner moving forward? You might have somebody that's extremely interested, loves going out, uh, milking cows, maybe running tractors, doing field work or whatnot, and has an interest to take over, but maybe doesn't have a well-developed skill set. Maybe is not as well honed on the financials or the business operation side of things. And while that may not be necessarily an endpoint to say no, it can't be done, they would have to then look from a succession piece to build out a support team around that individual that's wanting to succeed the business. So that they have that as support and advisory services in place for it to be successful in the absence of some of those skills kind of internally centered. So for me, I think that's the piece, and I think another piece you really want to consider, whether it be with a barn modernization project or really any major capital investment, is what are some of the limitations that you currently find yourself facing within your operation as it sits, and with the project or the investment that you're considering, how are some of these limitations or issues being addressed? Are they capably addressing some of it? Is it simply being considered because there is upcoming, changing legislation, housing requirements, et cetera, that might be driving it? Like understanding what the value or the reason behind what you're considering is important. Like I said, from a family legacy piece, because you might have somebody that's very interested, but if you don't have confidence that they have the skill set and the aptitude, you could not only be putting your family legacy in jeopardy in terms of where the farm ultimately ends up, but you could be putting your own retirement lifestyle in jeopardy because you could be succeeding into somebody that doesn't have the skill set in place to take over.
Yeah, great stuff. I don't know if you wanted in on that one, Steve, or we'll just move it to the next one, but I'll
Just a
give you a chance.
couple, just a couple quick comments to build on this. Again, like sort of from my experience, like, and again, if you kind of look at the scenario that's played out there, given the age of the dad and given the age of the barn in question and the size of it, there's a pretty good chance that there had been another family, the dad's dad, if you will, grandpa, if you will, involved in this, might still be involved, right? And my experience with a lot of producers of sort of that sort of age in the current environment is we've had a fair bit of focus on understanding the successor, the daughter in this case, what her capability is, experience, et cetera. But my experience would be that a lot of those producers, a lot of times the dads are, especially in this example, if you go through the math on how many cattle they're running relative to, again, the number of people taken in face value, my gut feeling would be that this guy is limited on accounting skills, that kind of stuff, because they're too busy doing other things. That in turn might mean that they're not able to fully assess the daughter's capability or even completely, assess their own. And that in turn is a challenge from a succession point of view, or even the ability to sort of understand where they're sitting now. So again, I think that to me has been, having seen it quite a bit, one of the challenges with succession planning isn't just about getting things squared up for the next generation. It's sort of being able to be introspective about yourself and figure out those issues. And I think we've covered that, but they're significant before you even get into this idea of what do I want to do tomorrow, right?
Yeah.
So that kind of shifts us into the financial side of things nicely, I think. So we talked in some of our earlier discussions as a group just around the idea of, where we are in terms of who you're working with. Steve alluded to it. I think Jeff talked about, the importance of working with an accountant. Speak to the different options and when it comes to what producers might be doing accounting wise or who they're working with, what that really impacts in terms of that and how it can help you with decision making. And maybe I'll start with John on this one.
Okay, so for me, to kind of summarize high level, I'd like to understand, are you working with a chartered accountant or a bookkeeper to prepare your annual financial statements for the farm business? And if so, are these simple tax return and statement of farming activities type information, or are these comprehensive, prepared by a professional financial statements that include a balance sheet, income statement, statement of cash flows, etc.? When considering a dairy barn upgrade or any other major project for that matter, having accurate and comprehensive financial information is crucial for making informed decisions and securing the appropriate type and level of financing required. Chartered accountants typically provide more in-depth analysis and reporting, whereas bookkeepers generally focus more on the day-to-day transactional recordings. So another consideration is if you are working, in fact, with a chartered accountant, do they have an agriculture specialization? If not, perhaps it's something to consider either a switch within the firm that you're working with to somebody that does have an ag specialization, or perhaps it's worthwhile considering a move to a firm that does have an ag specialization. From a banking perspective, understanding your current accounting practices help us assess your readiness and identify areas for improvement or support kind of looking forward. When considering the scope of the financial information, full financial statements offer a more complete picture of the farm's financial health and are often required for larger investments or lending decisions. Noting that the detailed professional prepared financial statements can strengthen your loan application and improve your access to funding. They can also provide valuable insights for budgeting, forecasting, and decision making, and ultimately support the long-term planning discussions for your farm operation. If you're not already doing so, I would highly encourage you to engage your accountant to conduct regular reviews of your financial statements, specifically with a view towards active participation in strategic planning and decision-making discussions. Now, that's easy for me to say because I'm looking at those financial statements that acts as kind of, from a banking perspective, that acts as your one qualified report card, if you will, of the financial health of your business. It doesn't tell the story. It doesn't tell us why you achieve these numbers or how you achieve these numbers. And that's where it's imperative to work with a qualified ag specialist and to be forthright and forthcoming with your advisory team, if you will, so that they can advocate appropriately on your behalf and tell the story. When I used to sit in a risk chair, you would see the numbers and you saw the what, but you didn't understand the why behind it. So for me, accurate and comprehensive financial reporting is essentially a key foundation for a successful barn upgrade or any other project for that matter, and the future growth of your farm operation as it sits as a whole. So that's kind of where I stand with regards to, the financial side of things. Are you working with an accountant? Are we working with a bookkeeper? And why we might consider different avenues depending on the needs of your business and the complexity of your management team.
Yeah, that's great. And I'm going to go to you, Steve, on this one to follow up with, because I know, you've raised the issue in our preliminary chats around the accounting side of things and how that helps. So just maybe follow up a little bit.
Yeah, like again, I think it really starts with record keeping. And again, record keeping is not just financial, right? It's your milk records, it's your feed use. Like all of those things are crucial to be able to both be an efficient producer and to be able to understand your business and then to ultimately do what we're talking about here, which is consider modernization, expansion, et cetera, right? So I agree completely that having proper accrual financial statements is important. And again, oftentimes, as John mentioned, the CPA is the right way to go. Now, again, I can't emphasize enough, having spent a lot of time in the BRM world for a long time, you need somebody that knows farming, right? And like there's a lot of CPAs out there that will do you a financial statement. It'll be of no use to you, but you can say it's in a CPA created financial statement. So it might be okay to get to the bank, but it's not going to be good with the bank in terms of changing your numbers, showing a business plan, all those types of things. And ultimately, that does work back to proper record keeping on your own, which sometimes a bookkeeping intermediary isn't a bad thing, but you've got to have somebody doing full accounting, proper accruals, et cetera. And again, given that there's still a number of producers out there, and this would be part of the discussion, that are sole proprietors or partners, they're not necessarily feeling the push to have full accrual information. Your three statements, they have certain groups that come in here in February, sit at the kitchen table, do your books for the year, do your taxes, and leave. That's not optimal, obviously, right? Now, again, if you have really good records on your own, that makes that exercise not as bad as it would be otherwise, but it's still, you got to have that information, and you need somebody who knows farming. Again, if you're in the Woodstock area, if you're in some of our key areas, you can fall into a good accountant who does farming. But if you're in other parts of the province where that's a little bit more limited, I've seen it where you get an accountant and they're giving you something that isn't a great deal of use to you. So you got to be able to know that. And I'm not sure some producers in this example are going to fully be able to appreciate that. So make sure you look for it.
Yeah, that's great. Jeff, I just want to switch gears a little bit. So in some of our discussions around the financial side, you were talking in terms of like long-term profitability, some forecasting type stuff. How is that so integral to when you're making some of these assessments, and why is that important to your perspectives on this?
Well, I think just to start, I think John and Steve did a great job of just explaining the importance of having good quality financial information and production information. I think it leads into this scenario where we're looking at building a new barn. You want to kind of see what your farm can actually handle in the way of debt or new debt that is associated with the barn, and or some of the debt that is either brought into the new barn scenario, whether it's existing debt or money you need to pay out parts of the succession plan or finding mom and dad a house, right? So I think it's important in this scenario here, maybe the daughter or the successor gets access potentially to the last 3 years of financial information and takes a look at that, and potentially together you build out a projection or pro forma post barn to see, if I had like, let's say $2 million of debt here for a new barn, even if we have no debt, like, can we even afford to make those payments? And I think that's very, very important, because once the barn's up, you can't take it back down, and the cat's already out of the bag, right? So I think too, also when you're looking at building a new barn, if those future barn payments are reliant on improved profitability, increase in milk production, if you're expecting 10 to 20% increase in milk production and labor savings, let's maybe talk to other producers potentially to see, are your expectations realistic and achievable? Because if they're not, yeah, the results may put if you aren't able to reach those and they're optimistic, you might put the future viability of the farm at risk and even potentially your retirement. So I'm a pretty optimistic guy myself, trying to be realistic, but I think the future long-term viability of the farm is heavily reliant on doing some of this pre-work, just to ensure that you're not it's not all emotional, and the emotions aren't running your decisions, and you are actually looking at the financial aspect. And I do think it's highly important for the next generation to be involved in the projection, and saying, because this is their future, this is your future as well as the person passing the farm on to the next generation. So I think we'll get into budgeting here in a little bit for building the barn itself, but I think using a rough per square foot value for a barn, even before you maybe even go and get quotes, just to do some mortgage calculations. And this is stuff you can talk with your lender about in your first meeting. But I think even before your first meeting, I think it's important to bring what you think you can do to your lender as well. So just a few thoughts.
Yeah, I'll come to you in a sec, John. I just want to mention that we will take questions in the chat. So by all means, if you're in the audience and you've got questions for the panel, put them in there and we'll get to them when we wrap up the panel discussion. John, I just want to come back to you on that point around the whole idea of forecasting and projections financially. Just some thoughts there from you.
Yeah, I think it's certainly an invaluable activity to conduct. But I would suggest that, depending on the level of sophistication of the farm operation itself and the owners or the successors, it could be a daunting task to really look at what does a cash flow projection look like? What does my projected balance sheet perhaps look like moving forward in a post-project situation, which is where it becomes kind of, and I'll loop it back into our previous speaking point there, it becomes increasingly important to have a strong advisory team around you, inclusive of an accountant that has agriculture experience or specialization, because together with them and maybe some other of your neighbors or colleagues that that have done similar type improvements, or even for that matter, it could be your feed rep that's gonna work with you through this on some of those numbers to say, is this achievable? Really having your accountant help you prepare and sometimes even analyze the viability. Is this realistic? Is something that helps make that daunting task a little less daunting for the individuals that are looking to say, hey, you know what? Is this viable? Can we actually do it? The biggest thing that I like to kind of hit on for our clients is, ultimately you need to be comfortable that what you're taking off, that you're not taking a bite too big that you can't chew it and swallow it. At the end of the day, you don't want to be setting yourself up for sleepless nights because you're worried about how you're going to make your mortgage payments in a timely manner moving forward. So really going through this exercise is not just demonstrating to your lender that you have the ability to service the debt that you might be proposing with the project that you're considering, but really it's more for yourself. Are you actually going to be able to sleep at night? Is this something from a managerial perspective that you and your potential successors believe is good for the business overall and good for the viability of your family legacy? If not, I mean, it's a stopping point, and really there is an investment in time, and there is a monetary investment if you're working with a chartered accountant to do this type of forecasting. And for some smaller operations, that can be a large enough expense. But I think that peace of mind outweighs the cost, and really it enables the bank better to have a more meaningful conversation and better line of sight on what you're doing. And so for me, beyond just the forecasting, and some things that you need to consider in the forecasting is, are there existing term debt facilities outstanding? And if so, what are the amounts outstanding and the associated repayment terms? As part of any upgrade, it's important to understand what your current obligations are. And if you're reviewing your existing term debt, be it, farm mortgage, if there is outstanding, equipment loans, other long-term borrowings that may be in place, it allows both yourself, your accountant, and your banker to assess your borrowing capacity and structure any new financing requests appropriately. Existing debt levels and their associated repayment schedules will influence your ability to take on new debt. The cash flow that's available to consider additional investments, be it, funded through traditional means like a bank, or in some instances, you might have surplus cash that you've generated in the business. And do you have the ability to fund some of those capital expenditures yourself rather than through traditional financing means? And ultimately, it allows your lender's assessment of the farm's overall risk profile and improve the ultimate loan approval process. It also enables your lender to look at what your current debt structure is and identify opportunities for perhaps refinancing that debt, consolidating debt, or really optimizing repayment terms, which at times can free up cash flow or improve loan terms ahead of major investments like a barn modernization project. I mean, ultimately, understanding your existing debt is really a key step in planning a successful upgrade, whether that be a barn upgrade, a farm purchase, the purchase of, let's say it's robots, whatever you may be considering. Understanding where your existing debt is and what the associated collateral is, and the ability to perhaps re-amortize some of that to achieve those goals is paramount as a next step on how you could move forward with your lender.
Yeah, I think all of you guys kind of approached it from the same sort of perspective in terms of the importance of planning and working with the accountant on that one. I would say, or pose this to you in terms of the preparation and planning and doing some of this analysis, forecasting. It can probably also help with the peace of mind and the confidence of somebody who's actually in a good position to do this. I would say, and I'll just put that to you in terms of do you see that sometimes? Maybe go with you, John, since you were just on this point.
Sorry, can you repeat that for a minute, Tom?
Yeah, just in terms of the value of it, you talked about, are you comfortable with the debt, or you want to avoid sleepless nights and endangering the future of the business. Doing this homework and preparation might actually show that you're in a good position potentially to do this. So it can add to that confidence and peace of mind.
Absolutely, absolutely. I mean, really, with farming especially, dairy supply management is a little more stability, but you've got crops growing, you've got a number of other factors in your life that can give you those opportunities for stress or additional sleepless nights. You don't want to have to spend your calories, your mental calories, worrying about if you're going to be able to service the debt that you're proposing. A lot of farmers really, truly like to focus on the livestock management, the animal husbandry, the field crop side of the operations, and truly in most cases, they leave the finance side of things to their trusted advisors, be it their bankers or their accountant or whatnot. So investing in the planning side of things and spending the time and the dollars associated with generating a proper plan really does give you that peace of mind and give you the confidence to say, hey, you know what? I'm making the right decision for my business and for my family and ultimately the legacy that I've helped create. You could be first generation farm, you could be fifth generation farm. And regardless of that, if you're looking to transition it, you want to ensure that that farm legacy stays in place. And so some of these costs, upfront costs, are a cost of doing business and a cost of that peace of mind. That's my take on it. It might seem daunting at the beginning, but it certainly is a worthwhile process. And the flip side of that is if you go through the process and you recognize, hey, things are going to be a little tighter than I'd like it to be. It might not provide the level of income that I need or the ability to carve off some of these core or non-core assets that might not be immediately imperative to the business and still maintain the business in a moving forward basis. So it's really just an investment in your own peace of mind.
I'll just go to you, Jeff, if you wanted to follow up on that or.
Let's say I think John covered most of them there. Saying for me is measure twice, cut once. It's I don't think anybody likes sleepless nights, so I do think it is important to make that investment in, and give you the confidence you need to make the decision to modernize or spend probably the most amount of money you'll probably spend on one thing outside of maybe buying a farm, just to make sure it's right for you.
Steve, any comments on that one?
Yeah, I agree with everything I said. Again, what my experience would be that a lot of producers struggle with the relationship sort of between like the agronomics, the production, and the finance, right? How those things relate. So if you look at this scenario, you have a producer who, unless they're, chances are, given the age, the scenario we've got, chances are they don't have a lot of debt. So to start carrying that debt and plan forward, they need to better understand their current circumstance, I think, right? They're already doing, producing quite a bit on what it would appear to be pretty small amounts of labor, which likely means that they're a sole proprietor or partner, likely means they aren't paying themselves a wage. You get this extension into what they can afford to cover. If you don't know your current situation to those points, you're not going to be able to plan particularly well, right? So this is a very good example of you need to understand your current situation probably better than you think before you can start doing these other discussion points, right? And again, I'd say that the example is well set up because it puts you right on the edge of those things, right? You bring in the daughter in, chances are you got to expand, not just modernize, right? You got to be very realistic about your assumptions, those types of things. So, it's really having some of those discussions are hard choices, and they're not easy to do. And quite honestly, there's not always a lot of people out there that can give you that right advice either. So you got to watch that too. So that's also can be a tricky thing.
Yeah, that's great. We're going to shift gears here. So now that we've done a whole bunch of the sort of the decision tree type stuff, we're actually going to get to the question that probably everyone's wondering about. And, the actual barn build budgeting kind of thing. So, what do people need to do to think about in terms of like when they've talked to builders or talked to bankers? What are the next steps? Maybe I'll just start with you, Jeff.
I think it's important to talk to some of potentially your friends, colleagues in the dairy industry who have built a dairy barn before you even start looking for local builders. I think it's important to, if folks will talk, if you got some good friends in the local area that have built barns, just kind of going over kind of what they went through, where they started, kind of just to kind of get and just even look to some of your advisors like for rough cost per square foot, and then whether it's talking to a lender or talking to some of your colleagues, getting some local builders in the area that if you haven't built in a long time, which looks like in this scenario probably wasn't, it's been a long time since the barn was built, so you probably, the same builder may not still be around. So then connecting with local builders, dairy equipment providers, and starting to build a budget. I would strongly advise getting a spreadsheet together and start building a budget on what you think it's going to cost, and whether it's doing it with a builder that's going to do all the building, excavating, and bring in the electricians and plumbers and everybody, like looking for somebody to do it and be the general contractor, or if you're going to do it and manage the project yourself, that's quite an undertaking to do by yourself. So I think that probably gets undersold on how much work that actually is, and how much it actually takes you away from your day-to-day operations. And so I think it's important also to look at, when you do actually form a budget, to build in 10 to 20% for cost overruns. Sometimes where you build your barn, you're excavating, you need a little more fill than you thought. And there always seems to be stuff too, like if you're doing a new dairy barn, for a lot of milk cows and the close-ups and the maternity pens there, but then you're going to retrofit your old tie stall barn for heifers, and that, like, that retrofit or the renovations of the old barn may cost. There's always stuff that's like, oh yeah, well, you're doing it, oh, we could do this too, and this is the best time to do it. So I think it's really important, if you can afford the extra potential pre-approval, to maybe have that in place, because it's a lot better to, once again, measure twice, cut once, and not have to go to your lender for a cost overrun loan, because those are real fun. So those are a few of my
great. Perfect. John, any thoughts on the whole side of barn budgeting?
Yeah, I think Jeff, you hit on a ton of good points, and I don't want to duplicate a lot there. I certainly would echo and strongly encourage, because you haven't taken on one of these projects in, let's say, 35 years at this point in time, give or take. Go out, visit your neighbors' barns that may have newer barns, but really, before you start doing that, or even as you're doing that, maybe go look at a variety of different type of barns. Are you looking to have a robot barn? Are you looking to have a parlor barn? Are you going to have a more modern tie stall type barn? What is ultimately are you looking to do? What are the pros and the cons associated with those respective setups? And then really talk to, once you've kind of focused on what type of barn you're looking to put in place, visit a bunch of your neighbors or other industry partners that you've got that have those barns in place, and ask the questions: who built your barn? What would you change about the barn if you could go back and do it again? What are some of the things that you really like, and where was some of your money better spent? And are you satisfied with this builder? I mean, the builder itself can make a world of difference. And like I said, going even further down that rabbit hole, like Jeff said, are you going to try to act as a GC to save some money? And if so, you've got to consider additional costs like builder's all risk insurance, et cetera. But really, just really understand and get behind it. There's a number of county AGMs or county dairy barn tours. So you have the opportunity to go out, see a bunch of different barns before you make this crucial investment, and kind of get a sense, if people are open to talking about it, what was your cost per square foot? How long ago did you do this? If they're recent, you probably have a reasonable line of sight on what costs might be now. But let's say they built the barn at the height of the pandemic when all of your input costs were quite a bit higher. Maybe that's retreated a little bit. Maybe it hasn't. So talk to the builders, talk to a handful of builders that you might be comfortable with, that you've heard good things about, or maybe you have previous experience with. Get those costs, get some quotes in place, build in cost overruns, because as Jeff alluded to, it's not always fun to have to come back to your banker if you just, let's say you borrowed a couple $1,000,000 and say, hey, you know what, I've got a 15% cost overrun, so now I need to borrow an additional $300,000. And what does that look like? Does it make servicing too tight? So considering that in your barn budgeting, building some of those cost overruns is absolutely important, and a very important consideration. And ultimately, just giving yourself that comfort to say, hey, you know what, if things were to cost a little bit more, if I ran into some unforeseen instances, that I still have that ability to cash flow it on an increased capacity, and harkening back to that piece, still sleep well at night.
So maybe I'll just call on my colleague Cynthia to pop up our last slide there from the slide deck. What should people think about when they're taking their meeting with the banker? And what sorts of things do they need to bring? And maybe John and Jeff, if you guys want to just kind of like, as you're walking through this, what do they need to bring, and maybe a bit of the why should they bring it?
Jeff, if you'd like, I just did a bunch of talking. If you'd like,
Sure.
You can
Sure.
lead in, and I
Let's
can
go-
add
let's
on
go,
it.
Jeff.
Or
Yeah, sure. No, I can go over this. These are just things that most banks will ask you for. So just having your last 3 years of financial statements, if you're incorporated, or 3 years tax returns for all business owners that will be involved, whether it's the parents and the kids in ownership. I think those are two kind of table stakes things that we need to just kind of see what the historical profitability is of the business. Even if we are looking for improved profitability in the future, they're just table stakes to get the discussion started. If there's multiple corporations involved, I would say an ownership schematic or just a tree to show who owns what, and having the shareholders of those corporations involved just identified. Do a net worth statement. If you're doing tax returns, accompany it with a net worth statement. This can often be done with the lender at the meeting. But having a list of assets and liabilities that you have it's good to have, just so it's your meeting is productive. With the dairy industry, I think it's always important to have your last two milk statements. It kind of tells you where you're at with your under credits, over credits, production. Just there's a lot of good information on the milk statement for your lender. So I think that kind of just lays the groundwork there. And if you have any other historical milk production records like DHI, or any information around liters per cow per day, it just kind of is good for benchmarking for the lender to understand kind of where you're at. And when you're building a new barn, obviously we'd expect that some of those things may improve with cow comfort and potentially 3 times a day milking in, let's say, a robot situation. But once again, good to know a baseline for where you're at. And if you get into doing the financial projection and forecast, I think if you're going from having no debt, I think this is an important piece of the puzzle too as well. If you have no debt now, you're not used to making mortgage payments. So I think doing a projection to see how you're going to be able to afford the debt of the new barn, I think, is super important. And last but not least, if you've gone to getting quotes and building a barn budget, obviously that's really important to bring to your meeting too as well with your lender. So, John, I don't know if you want to expand on that at all, but
no, I think as you poignantly pointed out, these are kind of the table stakes, or what I would, if I were sitting in your shoes, look for to bring with you for your initial meeting with your banker. You're going to come prepared. The net worth statement, well, it can serve if you're just doing tax return type information. It can serve as a de facto balance sheet of sorts for your operation. If you actually are doing accountant prepared compilation engagement or above financial statements. The net worth statement would be more on the personal side of things, assets and liabilities that are held outside the farm operation. This also gives the bank a little bit of line of sight on, if there is some cost overruns, do you have access to liquid capital to be able to self fund some overruns, or do you have sufficient funds, or what amount of funds do you have that can help support your lifestyle and retirement afterwards? I think these are important pieces to consider. But yeah, when we're looking at it, we've got financial statements of some sort, and then we've got a couple items there in regards to the management side of things, with regards to the last two milk statements, DHI reports, et cetera. It allows the bank to kind of assess your management skill set, and then finally, the forecasting and the budgeting is imperative to make an informed decision. So have those ready, start preparing them, and come prepared to your banker. It's gonna bode well for your overall skill set and your ultimate loan application should you decide to move forward.
And it makes for more productive discussion, and you can talk about other things other than this too, as well, if it's all prepared ahead of time. So.
Yep.
Okay, that's great. I think we can probably stop sharing there, Cynthia. Appreciate you helping us out with that. What I would say to the panel is we've kind of gone through the questions we wanted to get through today. I appreciate that. I will give you guys a chance to kind of give some last thoughts on the whole modernization financial thing. I will say the financial committee is definitely thinking of doing a few more of these webinars. So our next one probably in the next 4 to 6 weeks. So look for that in 2026. I do want to mention that we've got a quick poll up if you are an audience member, and we're just kind of curious as to where did you hear about our webinar as we're launching this project. We're interested to know how you heard about it. So yeah, we'll just go around the screen and any final thoughts on modernization from the financial planning lending standpoint, and I'll start with Steve.
Yeah, again, I think the idea of thinking about modernization is great. It implies an interest, it implies a long-term view. But understanding your current situation and having ongoing strong information records, again, is crucial for any circumstance, including this. And, having that material available to you, you understand that you can use it. Again, it's an old adage, but it's not new here. So make sure you have those things in place.
Great, thanks, Steve. Jeff, any thoughts as we wrap up here?
Yeah, I think in going with what Steve said, just to build on that, I think having a strong advisory team around you is crucial. That would include, a good ag accountant, colleagues, like relying on some of your close colleagues, like friends in the dairy industry, leveraging them, having good, open, frank conversations with them. And I also would say, your lender and even your lawyer are all part of your advisory team as well. I think it's important. You're not alone in this, and people have walked the path in front of you, and just leveraging good, trusted advisors around you, I think, will help you make the best decision in expansion, modernization, and succession. So those are my points there.
Thanks, Jeff. And last formal word to you, John. If we don't get questions, though, we'll be wrapping up soon.
Fair enough. No, I think Steve and Jeff aptly covered a lot of the key points from a summary piece that I would hammer on. Again, strong advisory piece. Be prepared. Make sure it's something you're comfortable with, and if you aren't working with a good ag lender, just talk to your financial institution, get connected with one, and if you're not, reach out to one of us. We can direct you in the right avenue. But appreciate our conclusion in this call. So thank you.
Yeah, no, I just give the last chance if anyone's going to throw a question into the chat, or if anyone wants to raise their hand in the reactions at the bottom there. If you choose, raise your hand. If you want to unmute and ask a question, we'll give you a chance to do that as well. But not seeing any. I guess I'll just ask one more in the chance of that somebody is shy and wants another minute to formulate their question. So in terms of strategy, I think you guys have all talked about taking the emotion out of the decision. What are some of the strategies to help you, take that emotion out of the decision? Our goal with this project is to make people make their own decisions, but we do want them to make informed choices. How do we resolve the idea of taking emotion out of the decision? Maybe I'll start with you, Jeff.
I think it's important to deal with like the numbers, the facts. You know, we all, like, which makes us all great, make decisions sometimes, and we get fired up and excited about things. We think, this is what we have to do. We need to do this, but I think just taking a step back before we jump into like a permanent decision, I think it's really important to look at, where we're coming from, the numbers that are attached to our existing operation. I think it's important to see where we are currently, or where we were, or where we are, to be able to make a good informed decision moving forward. To take some of the emotion out of it, I think emotion is still important, but I think dealing with facts and dealing with numbers, I think it's really important to make sure the decision is right. So
I'll go last word to Steve. Just seeing some compliments in the chat so far, so maybe we should end on a high note. His last word to you, Steve, and then we'll wrap up here.
Hopefully it's high. Yeah, again, just being realistic about your information. And again, I think being realistic about some of the things about the operation that feed into that. And that's a difficult thing to do, but being clear about that gives you the best chance to understand your circumstance, and then the best chance for success if you want to change that. So.
Okay. I said last word to you, but John, I'll give you the chance to at least say something.
No, honestly,
Right.
I think everyone covered off pretty well. If you really have the ability to take the emotion out of all decisions, that's a secret sauce that I haven't found yet. Agriculture producers, from my experience, there's a fire in their belly. They're very passionate about what they do. If they weren't that passionate, they didn't have that raw emotion in place, I imagine a lot of them wouldn't be working on the farms and having some of those sleepless nights and worrying about weather and market conditions, et cetera. Right. So separating the emotional side of the considerations from the pure business side of things is tough. And that's where you just really lean into your trusted advisory team to kind of help make you help guide you in the avenue to make the right decision. But yeah, that's a secret sauce that I don't think a lot of truly figured out. And truly, I'm not sure I want to deal with a lot of folks that don't have some of that raw emotion or passion. Right. We're fortunate enough to deal with a lot of very passionate primary producers, and while it's emotion can sometimes present the opportunity to make a less than opportune decision. It's what drives the industry forward. So yeah, like I said, it's a secret sauce I haven't fully figured out, and I'm not sure I want to fully figure it out either.
I think, John, what you're saying is applying a balanced approach might be the operative way.
Jeff, I appreciate that summary.
Yeah, I agree with that comment. So there is one in the chat here, a comment around interest rates back down. Is there a factor of watching what they could be again in 5 years from now? And can that put people in a bad situation with a new barn? Low rates now work, but not higher in the future. Anyone have any comments on that question?
Sorry,
go ahead, Steve.
Well, I was going to say, I'll cover it so our two banker friends don't need to get jammed in that. Like that largely has to do with your forecast, right? To think you can project it, I think that's unrealistic. But to think you can plan for it, if things are extremely tight at 4%, then you need to be prepared for what's it look like if it was 6, as an example, right? So that kind of math is actually reasonably easy to do from a scenario planning point of view. And it gives you a flavor for what do I need to do or be prepared for if it goes the other way. That can affect term, it can affect other things, or it can affect the complete decision at all, right? So again, those are the pieces of the puzzle that you got to be realistic about. And oftentimes it'll result in not doing the project, frankly, if you get into some of those scenarios. But that's part of the planning process. And again, if you've worked through those scenarios, you won't be surprised by them. Just like when Jeff said about adding 10 or 20% to your cost estimate, those are things you need to have figured in. And if the cost goes up 10% and you can't handle it, well, then you probably better not start the project. So
yes, Steve, I'd like to expand on that to say, if you're dealing with a tenured, responsible financial institution that has experience in the ag workspace, on our side of things, we're doing interest rate sensitivity analysis we're typically saying, okay, where the current interest rate environment is, does the farm operation in its current structure have the capacity to handle a 2% increase in interest rates? So we're doing some of that sensitivity analysis already to say, if this does come into fruition, can the farm capably deal with it? Now, it might make things a lot tighter, but then it also kind of goes back to, what does our comprehensive collateral security package look like? And do we have the ability, should that scenario present itself and we've got some cash flow concerns moving forward, can we restructure the existing debts based off of the security package we have, or could take additional security to reamortize debts to alleviate some of those issues? So, you know, everyone's crystal ball is pretty hazy, especially with our cordial friend south of the border and the challenges he's created in kind of the market outlooks on a move forward basis. But yeah, like I said, any real responsible lender is doing interest rate sensitivity analysis to ensure that there is that buffer in place.
Yeah, I think that's great. I think we'll leave it there, unless Jeff is nodding. We're okay with that answer, I think, so we're good. I
Yep.
appreciate the question, Jason, and we'll just thank these guys for being part of our panel today. As I said, look forward to some more of our Financial Committee's contributions in 2026. We're hoping to have our next webinar in the next 4 to 6 weeks. It might be a different mix of faces, but the same approach is going to be in place to get good information and take some of the mystery out of modernization. So I appreciate you guys' time. Fantastic job answering the questions and having a good discussion. So appreciate it.
Thanks. Thanks,
Thank
everybody.
you.
Merry Christmas.
Thank you very much.